Righty, welcome to Stockradar Stocks on the Move for another week. My name is Richard Lee. I'm Stockradar.com.au website, and today's date is the 18th of July 2024. Okay, it's a little bit of a top about the last couple of weeks. We're trying to get our focus at the moment. That's what I'm a bit about today. So the positives this week is we did see a good bounce back last time from a bit of a sell-off. We had another one last night. Yeah, then S&P and Nasdaq a little bit choppy. The Dow tried to make a new high and it's come back. So it's a little bit different at the moment, but don't fret the blips. The trend is our focus at the moment, and the trend of the stock market, especially the US markets, is still up at the moment. All markets correct, as we know, so they don't go one way the whole way. So we just keep our cool in these situations. And our market itself, the banks have maintained their strength. They've been an amazing force behind this market. They're now pushing the index towards its highs at the moment. And the ASX 200 is at its all-time highs at the moment. And I'm also seeing some pretty big volumes go through some of these stocks at the moment. So bigger volumes than I've seen for a while. So maybe we're going to put a little bit of catch up as the US market takes a bit of a pause. But again, focus on your specific stocks. Not all stocks are going up, as I said before. Just a small group that are performing pretty well, so we follow those stocks. Okay, so let's get to the top 10 for the week and see what we've got there. An interesting selection there. We've got quite a few banks in there, believe it or not. How strange. Aristocrat still sits at the top there. Being an A, it's always at the front there. Bendigo Bank is doing it amazingly well, and we're seeing a BOQ. Maybe a bit of catch up there. We'll have a look at that one stock a little bit later on. And the net wealth has gone through gangbusters. It made a new high a couple of months ago, and it's just gone on and confirmed the new high status. Ventia Services is a little bounce back king. Had a topple, then it bounced straight back again, is making new highs and running on well. And of course, then we've got Newmont, which is also doing pretty well at the moment. So we like all these stocks. We're holding them all. They're all running on well for us. So we're fairly happy customers at the moment. Okay, so let's go to the stock pick count. It's flat this week, so no ins, no outs this week. 46 stocks of 155 going up, and 17 ETFs of 24 going up there. So that's a fairly flat thing, but we do have a nice pool of stocks to select from that 46 stock pick, so there's some great stocks in there, and we're going to look at a few in a second. Okay, first off we've got, we're going to go to the overseas markets to start with. Okay, so Dow Jones Industrial Average, as we can see, it has made a new high. It's come back a little bit. No real concern. We've had some good volume on the upside there. So at this stage, the Dow, it still looks okay. When we're starting to wander down around below this sort of level, that's where we've been a bit of concern. But for the moment, it's okay. The Nasdaq and the S&P have also chopped down quite a bit. Remember, they have gone up a long way. We've seen this pattern happen before. We've seen this sort of downward moves. Markets always correct, as we know. We worry about when these sorts of things start to break down here, support levels, trend lines, things like that, and an old high back here. So this sort of level here is probably something you would watch on the Nasdaq. Somewhere up around here somewhere for a complete breakdown. But for the moment, we're still well above there and it looks okay. So we go to the S&P, a little bit similar. The S&P, it's come down as well, but we've also got this area here that we'll be looking at down the low there. We can probably draw that little line again. Just across here, this hold high here, which will provide support. So we've got a bit of trend line support, a bit of moving average support all going through here. So this is the moment we're looking at. Now we've had a bit of selling here, and I think also the Nasdaq has as well. So we need to watch it. It's like a warning shot, okay? But nothing to really action at the moment. We just keep an eye on things. So that's the overseas markets. Also, heading into an election year is always an interesting time for the US markets as well, so be mindful of that. Our market, as I said before, it's tracking up to its highs. It's on its highs at the moment. It's doing very nicely. We've got those great banks doing well. It's had this bit of a chop around for a while, so now we're breaking clear of that, which is a good sign because it puts a bit of a support base below us at the moment. So our market is looking fine at the moment. No real problem there at all. And we go to the commodities. And the commodities are looking okay. Gold is looking okay. The rest of them aren't really looking that good. So gold is holding up, and as it has done for quite a while. It's going through a really nice phase, this uptrend here phase at the moment. It's having a pause. It doesn't look anything like significant at the moment. There's no huge amount of selling appearing. So gold is still a poor situation for me. Copper a little bit different. It's now starting to break down there pretty badly. We're getting a pretty sharp pullback here, and we're getting some pretty good selling through here. So not a lot of buying. So the buyers have disappeared in this one, and the sellers are holding court. So we're trying to find support here. We haven't really found support here, so this could come down a bit further yet. So Dr. Copper is not so well at the moment. Brent crude, again, well, bang, bang. Every time it pokes its nose up, it gets sold off, and we've seen some big selling hit this commodity at the moment, and this is also pretty neutral on there. So we're still in the trading range here, but upside forays are getting knocked on the head pretty quickly, and we've got a whole series of sort of lower highs happening here, which is probably not a very good sign. Probably means we're going to test back here around the 72 level, the S1 level for Brent crude. So not a lot of hope, I'm sorry, for the crude people out there looking at Santos to break higher and things like that. And I think Woodside had a pretty nasty day yesterday, so we're not all that happy about that. So, but we don't really hold anything in that area, which is a good thing. So we'll just let that thing fly as it will. Okay, so go to some stocks now. Now, talking about strength in our market, we focus on the major end of the market, the safer end of the market, and if you look through some of these stocks at the moment, they're going gangbusters. We look at Wesfarmers, it hovered around that high for a little while after a huge rally, coming off from about $50 where we entered. It's now up around 72 and making new highs at the moment and looking very, very strong. And we've got some nice volume pushing through here. Momentum's already positive, but now starting to kick higher again. So acceleration looks like it's going to move higher again. So Wesfarmers is looking very good at the moment. This is a new high, and although it's very strange to think that it's going to keep going higher, they certainly do when they make new highs, and they can go a lot higher. So for Wesfarmers, it looks very interesting. Trend intensity rating is 10. The trend is up there. Okay, again, we go to the banks. Commonwealth Bank again, it's still 132, nearly 133. We had the breakout here above 110. It went to the 130. We'll just extrapolate up this range to give us a bit of an idea of where the market might get to, and it certainly got to there, and it's exceeded that target, which is good. Trend intensity rating remains 9. The trend is up. Moving averages pointing up. Volume a bit middling, a bit indifferent there. We can see some red bars here and some green bars. So it's solid enough. Taken in isolation, it's a bit of a worry. Taken in a group shot of trend intensity indications, it's not such a worried thing because we have every other thing: momentum, moving average, and price telling us the market is going to go higher. So that looks pretty good. National Australia Bank, again making new highs again yesterday. Meanwhile, going on the same sort of thing here with NAB. I've just extrapolated up the range to give us an idea of where it could probably get to, and that looks like a fair target for the moment for this range here. Trend intensity rating is 10. Average is pointing up. Again, volume is probably looking a little bit better here, but momentum is positive, so it's a trend intensity rating of 10 and looking very strong. National Australia Bank, all the banks are looking good. Even ANZ, which is pushing hard at that resistance, it may get through, we hope. We'll just have to wait and see, but if it does get through, that'll be a very good break because it's a fairly significant resistance level, so we're watching that. And the other bank we like to see is Westpac, which is also doing very well at the moment. Okay, a stock we've been following for a while. I think we had a week off last week. Fisher & Paykel, again, it made new highs again yesterday, up around 29.73 now from our break point down around 25. So it's done a very good job. And looking like it's heading towards R2 without too much problem there. Volume's a little bit hard to read here. We had a bit of selling here, but a great sign, as you know, the stock's gone up again. The buyers have come back and pushed the stock up again, and all of a sudden those sellers have just disappeared. So go figure, but that's a little picture there we'd like to see. And momentum is also still very strong there, still very high in the scale and looking pretty good. So price acceleration is looking very, very good for Fisher & Paykel. Okay, so that's a nice little one for you to have a look at. Again, the bounce back kit, as I said before, Ventia Services, an interesting stock which had a really good start. It traded in a good range, a healthy range, broke out, a nice breakout. We've got a good shift higher, stopped out quickly just to protect that quick fast gain, and we've re-entered here above 388, 385, and it's now above 420 at the moment. So it's looking good. Ventia Services performing well. The trend is up. Trend intensity rating is 10. It's above the average, which is giving price support. Well, you can't really see the volume because it's all squeezed up by some of those big selling days, but I'll try and get some of them up there so you can just see a little bit of it. Takes a while to get it all up there. But it is there, the volume, which is good, and we can see momentum again is also kicking higher there. So it's got a trend intensity rating of 10 and looking very good. Okay, so now the next one we go to is Bank of Queensland. I talked a bit about our banking sector, how strong it's been, even Bendigo Bank, the regional, but it seems like there's been a fairly sharp divergence in Bank of Queensland and Bendigo Bank's performance. But finally, it looks like Bendigo Bank might be about to turn the corner. It has it's developed a higher low here. It's got significant resistance here up around 630, 632, and that's the level I'll be looking for it to get through to trigger an entry, trigger a trend reversal. I've got a low here, a high low. The high between the two lows is what we want to see it get through. If we can get through there, we have a trend reversal. We then want to see, hopefully, it above the average, which it will be, a bit of volume, which we're starting to get now, and momentum, which is just starting to tick higher again. So we could be in the very early stages of this new uptrend, with the trend intensities ratings the way we read them. New highs often get those trend intensity ratings of 9 or 10, but the trend reversals don't, because they come from a weaker base. They often enter on a 5 or a 6, which is just suggesting we're at the start of the trend. So for Bank of Queensland, I think it looks like quite an interesting trade at the moment. It does yield very well, which is always nice to have a little bit of cushion there if we need it. Okay, so that's Bank of Queensland. Okay, moving along to CSL, which, as we know, has been in this huge range for so many years now. Here it is, big range since 2020, right through to 2024, maybe 2025, I don't know yet. But what I do know is this stock is starting to rise. It's got some very good volume. First time we've seen this good volume for a while, and some good momentum, and it's above the average. Okay, now a good solid situation for trend intensity, but we need price confirmation. We need it to break through R1. Now it's a fairly wide band there, and we've got a lot of lows across here around about the 315 level. Okay, then we've got the ultimate high at 336 level. So depending on your risk profile, you may take it from here above 315. We will wait for the final high to be broken. That's our rules. So we will be waiting for about 336.40 to fall before we look at that stock. But it is looking as more encouraging than we've seen for some time, CSL. So get excited and get hopeful. And we've seen Cochlear had a good breakout, and we hope CSL will follow. But don't preempt. Just be patient and watch. Look at trend intensity where it is. It's ready and poised. So it's an exciting opportunity, because if it does break here, that's a significant break of a big trading range, and will certainly, the odds are that it will precede a very good trend. Okay, so that's CSL, and again we can have a look at Cochlear, which got out of the blocks a few months ago, back here late last year. It's rallied on, and now yesterday had a really big day this week, and it's now testing these highs again. Now, because of what happened last night, it may not go through again this week. But again, this bar here is green at the moment, but it can change. Until the week's closed, we don't know where it's going to finish yet. So it hasn't broken out yet, but it is looking pretty healthy. Demand has been pretty good in Cochlear there. Momentum is stayed positive, but it's certainly slowed down quite considerably and is above the average. So the trend intensity rating still gives it a +7 at the moment. So we're fairly hopeful this will hold. It may just be not going to be the day. We're going to see it run through all this week, possibly as tomorrow is Friday. Anyway, we'll wait and see what happens. So that's Cochlear for you, looking pretty good. Another new stock I want to have a look at is Flight Centre. It's been in this big trading range since a huge collapse back in 1920. With COVID, it then rallied. The travel stocks were obviously hit hardest of all because you couldn't move around. But slowly but surely, since 2023, we hit the low down here at around about $14. It's been climbing a series of higher lows, but higher highs have not yet developed. But we are in this situation where we could be getting to look to a higher highs. Now we've got a bit of volume here. Let me just squeeze this up a little bit so you can see it a bit better. Okay, so we can see a little bit of volume coming through, which is very nice. This volume here on this upward tick here. We saw a big week this week. There's a bit of volume going through here, so the sellers are not going away just yet. However, it's still a level to watch. It may not be this time. It may come back here and have another go. It may be this time. It may be next week. I don't know. But we'll just watch what happens here with trend intensity. It's +1 and neutral at the moment. We've got it above the average. Volume is looking a bit better. Momentum's looking a bit better. So the cards are ready to fall, if you like. Dominoes are ready to fall if it does break through that level and we get a confirmed break. So keep an eye on Flight Centre. It could be an exciting one because we do know that the traffic volumes have gone up a lot in the airports, and things are probably looking a little bit better for people travelling around these days. Okay, so that's Flight Centre. Now the other two I want to look at is Woolworths and Coles. For the first time in a while, we've been looking at Woolworths again. It's had this big range that has been stuck in for a while, like Coles. Hasn't gone anywhere for quite a few years. It's just rotated in a sort of a $30 to $40 range, $42 range, so big $10 to $12 range here. Since the start of 2003, it's been coming down to hit a low in May this year, and since we've seen a rally on very good volume, and it's been quite sharp. Okay, and it has come off a low point. We always expect support down here at the low end of the trading range, but the volumes have been very good. We saw some heavy selling here, and maybe this is the indication that maybe we've seen the last of the sellers get out of the market, and now we're ready for the buyers to take control. So we're now seeing the potential for this switch zone area that we're looking through, that I always look at. I need a trend reversal, of course, to confirm it, but this evidence certainly builds when I get a resistance level here gone, the trend line broken, and now moving above the average. Trend line hasn't broken yet, so we've only got 2 out of 3 yet, but it's looking positive there with the volume there. So this is a part of a bottoming process. Trend intensity rating is -4, so it's not quite in the neutral zone yet. I think Coles is. We'll look at that in a second. But it is looking interesting. If we do get a pullback and we did get a trend reversal above here, then we certainly have a potential to target the highs here and probably something worth trading. Unlike Coles, we're going to look at in a second. So we'll keep an eye on Woolworths because the demand is certainly there. Momentum is certainly climbing quite quickly, which means the selling pressure is probably now gone. And this also suggests maybe the sellers have now finally done all their selling and there's no more left to sell because the market has risen sharply. Normally these sellers would be jumping over a rally like this, and they're not doing that. So that's a good sign. So Woolworths looking interesting, worth a look now. Finally, after many years of being downtrend, and Coles you can see again in a trading range as well for quite a few years since 2020. But it has slowly climbed this year from late last year. Excuse me. And just recently we've started to see, if I just squeeze this up a little bit here, we've just started to see this market rise quite significantly on good volume and good turnover here. Now, because we haven't broken the resistance level, this resistance level is too close for me to make this a trade worthwhile, so I'll be waiting for a break of R1 before I trade this one. Trend intensity is +1 at the moment. It's looking good. It's rising a good average. It's gone through that switch zone that I like, and now I want to see a trend reversal or a new high confirm that change. And unfortunately, at this stage, it will probably be a new high for Coles, but we may get a trend reversal from a lower level in Woolworths. So they're the two stocks that I'll be looking at there recently, looking a bit interesting again, finally. So plenty of meat there for you to have a look at, okay? Plenty of new stocks, plenty of existing stocks to jump on. You can follow Stockradar for updates and all those sorts of things. As many stocks near their break levels, maybe we're just getting started. It might seem strange to you, but I'm just seeing a lot of volumes go through a lot of stocks at the moment, and the prices are rising, which is a really good sign. We have nothing like the US tech related, so we're mainly resources which are weighing us down at the moment. The BHPs, the Rios, the Woodside, they're just sitting on our market, and the banks are trying to pull us up. So we've got this divergence happening there, or this pulling power happening, a tug of war, I should say. So the resources are weighing there. Fortescue, of course, is another one there. So under the weight of the index, under the weight of that, I think the index is doing okay. So, and I said there's some underlying stocks in there, whether it be Woolworths, Coles, Bank of Queensland, CSL, Flight Centre. They're all looking interesting at the moment for you to have a go at. So just remember to make sure you've got your stops in place when you do all this sort of stuff, okay? So just one little slide I've got for you today. It's just a little reminder these days of, when our trying to build our trading skills, something to focus on, taking control of what you do. There's all sorts of inputs we get, and we really got to focus on what we do and what our plan says. So we take control of the trading situation, and we command what we're going to do, and don't respond to what the market's going to do. The market will respond to us, and our trade plan will react to that. So focusing on your system in isolation makes decision making simpler and easier. I use 4 tools. Those 4 tools guide me all the time. Okay, I don't have 17 different parameters, divergences, fundamental technical inputs, all to confuse me. I have a very clear reason on why I buy, so then I know what to buy and I know when to buy. Okay, so don't worry about what doesn't matter. Okay, there's lots of things out there that people think are important, but they don't actually matter. What we're interested in is price and trends, and that is it, basically. Okay, so that's about all I've got for you today. You know that I've got a free blog you can have a look at. You can take a 2-week trial of my services, ask me questions, find out what I'm doing. My main inspiration is to try and make people understand that systematic decision making based on good discipline is what will get you there in the end. Okay, so that's the important thing. Okay, so in the face of any market wobbles, simply focus on your stocks and your stops. Okay, your stocks and your stops are what matter. That's where you're going to make and lose money, not what the Dow does and not what the ASX 200 does. Okay, so not every stock follows the same path, and as you can see there, we've got 46 stock picks going up as the market's going up, which means there's an awful lot of stocks not going up, going sideways to down. So they're the ones we just push aside and not worry about them. Okay, well, I hope we're giving you a bit of guidance today on the market. Just again, focus on your stocks and your stops, and that will help you through times when the markets wobble a little bit. We just don't know. You will get stopped out of some will survive, but that's it. Okay, so watch your trends, heed your stops, stay safe, and I'll see you all next week. Thanks very much. Bye now.